on this week's Economic Week Ahead, all eyes are on inflation prints and trade talks between the US and China. Of course, uncertainty still looms there amid the US government shutdown. And joining us for a look ahead is Joshua Mahony, Chief Market Analyst at Scope Markets. Thank you so much for your time, Joshua. Now, yeah, we've come off a week that was gripped by US-China trade risks and US regional bank credit headwinds. Are those drivers still in play going into this week?
If you look at the sort of reaction that we've seen to stock markets so far today, you would say that the theme really is around the US-China issue, because we haven't seen any movement when it comes to the regional banks beyond what happened on Friday. Of course, there have been a number of potentially isolated issues on that front, but we don't necessarily know whether this is a burgeoning credit crisis that we need to worry about. So people are willing to put that on the back burner and instead think more positively about the possibility of a breakthrough between the US and China. Certainly Donald Trump, who started this trade war in a very aggressive approach to the Chinese, apparently now all he wants is them to buy soybeans again and to get some rare earth minerals sent back his way. So he said already that basically he doesn't think it's sustainable for the 100% tariffs to come into play. Scott Bessent's expected to meet the vice president on the Chinese side this week. So there's hope that we will see a breakthrough, and that's part of the reason why we're seeing equity markets up heavily today and the Hang Seng up 2.5%.
Well, I mean, seeming that markets also are looking past the third quarter numbers that came out from China, because we saw slower growth there. And what was interesting is that it was in line with market forecasts. Was the slowdown inevitable?
Well, to some extent, but it's actually, it's holding up relatively well. I mean, 4.8%, yes, it's below the 5% target. But if you look across the first 9 months of the year, it's a 5.2%. So that means they're likely to come in at target for this year. Their numbers are actually held up relatively well because of strong exports. You might think that that's counterintuitive considering the potential breakdown between them and the US, but they have managed to find many other partners when it comes to selling their goods around the world. So the numbers were relatively decent. Elsewhere, we saw sort of unemployment rate decline, the industrial production figures on the rise, and there's also some hope that with the policymakers convening this week to set out a 5-year plan, that there's a possibility that maybe we start to hear more about stimulus in the near future too.
Well, quite interestingly, we also had an AWS outage, of course, Amazon Web Services, affecting many company websites. And I guess why it's interesting for us is because of the CrowdStrike outage that we had last year that affected a lot of companies where they lost a lot of money. What do we know so far about the impact of this technical issue from AWS?
Well, look, I mean, you're right to sort of hark back to that CrowdStrike outage, because that gave many people the fear that we're going to see a massive decline in terms of the share price today. What's notable is that, of course, AWS is absolutely massive. It's roughly 32% of the cloud business globally. They've got so many clients, and this really does make you realize how big their client base and customer base is. But the fact that by and large they managed to fix many of the issues relatively swiftly doesn't make you feel like they're actually going to start having sort of financial claims levied against them, so they have a significant backlash. And due to the sheer size of them and the fact that many of their customers are going to be entirely ingrained in their ecosystem, it seems very unlikely that they're going to lose customers over it as well. So the stock, Amazon's not necessarily done great today, but it's not declined in a heavy manner. In actual fact, it's just sort of missed out on the gains that we've seen for some of the other big tech names today.
All right. Just before we wrap up the conversation, of course, the impact of the US government shutdown was a delay in a lot of economic data. But we have one of those coming through this week, the September consumer inflation print that's out on Friday. What's expected from this data point?
Yeah, it's going to be a big one. I mean, ultimately, we've grown quite accustomed to having basically no data.
Yeah.
Probably Donald Trump doesn't really mind it that way because he seems to always think that the numbers are all against him. That's why he fired the BLS chief previously. This time around, I mean, if you look in terms of the monthly figures, which is what I care about the most, they're not necessarily ideal. We're talking about the headline figure at 0.4%, the core figure at 0.3%. So all in all, they are tracking higher than they need to be when it comes to the monthly figures. That has been the case. It's been growing over the past few months, and notably, actually, in a week that also sees the UK inflation data coming out. UK headline sort of year-on-year inflation significantly higher than the US, but actually UK inflation for the past 5 months has been controlled. But the monthly figures in the US have been gradually building, and at some point, maybe markets will start to pay attention to that.
All right. Well, we do have to wrap up the conversation there, Joshua, but thank you so much for your time. Always appreciated. That was Joshua Mahony, Chief Market Analyst at Scope Markets, with the Global Economic Week ahead.